Hi, everybody. This is Greg Gossett from Gossett Trading and Mentoring Live. And today is Friday, July 19th, 2019. And we are now in the final hour of the trading day and also in the final hour of the trading week. I mention this every day, but in my opinion, the prices as close as you can get them to the end of the day are the most valid prices and therefore the best prices to make your buying and selling decisions from. At the end of the day, in the last hour of the market makers, the large financial institutions, they take over the market. They're in control. And in my opinion, they move the prices to the most valid prices of the day. That's why I like to call the final hour of the trading day the lie detector of the trading day, because it will move back to really where it should be and therefore the best place to make your buying and selling decisions from. So anyway, so we're having an interesting day today. The Dow was up big earlier. Everything was up. We've had a big reversal in the market today. It's pretty interesting. We've also had some news about the Iranians seizing an UK oil tanker in the Middle East, and so of course that is going to affect the market. And we'll see what happens. It's always a bit of a good idea on Fridays. You never know what's going to happen over the weekend. It's 2 days where things can happen, can move the market. So it's just kind of a tendency of mine to be a little extra conservative on Fridays. So let me just make sure we're coming through loud and clear. Can everybody hear me out there okay? If you can, maybe just type in the chat. Let me know that you can hear me and that it's coming through okay. All right. So anyway, I hope everyone's had a good trading week, and I hope everyone is going to have a good upcoming weekend. And so let's get through this last hour and see what's going on with the market and my position. So the format today is, first of all, we're going to run the U.S. legal disclaimer. We're going to get that out of the way. We're going to come back. We're going to take a look at all my current positions, and we're going to talk about why, when I bought them, why I bought them, and most important, how I'm going to manage the positions going forward, how I'm going to manage them if they move my way, and how I'm going to manage them if they move against me. And then we're going to do a little segment on trader psychology. I like to do this every day because I really, honestly, and truly feel that trader psychology is the most important thing for a trader to actually become a profitable trader. It's something that you have to battle with, and that's why I like to mention it here, because I hope it's going to sink through to you. I hope it's going to rub off on you, and you're going to kind of start to internalize what I'm saying about getting out quickly, keeping your losses small, letting your winners run, not being impulsive, all the things we talk about every day. So, and then after that, we're going to go down through my watch list. We're going to go through each stock one by one. We're going to take a look at all the technicals. We're going to take a look at support and resistance levels. We're going to take a look at moving averages. We're going to take a look at ATR channels, MACD, RSI, volatility, and if we get a confluence of these indicators lining up, then we may make a trade at the end of the day. My trading philosophy is, if you're going to go long, make sure you're going long somewhere where other people are going to be long as well, right? I mean, makes sense. If you want something to go up, you need other buyers to help push that price up. So why not enter a position where other buyers are going to be? And in my humble opinion, when you have multiple technical indicators lining up, that is where other buyers will come in. And so if I'm going long, I don't want to be where groups of sellers are going to come in. I want to be where groups of buyers are going to come in. So, all right. So, and then after the market closes, if you have any questions about anything I did today or mentioned today, please don't be shy. Just type them into the chat and I will do my best to answer them. Also, if you have any particular stocks or symbols that you would like me to look at, I would be very glad to give you my humble opinion. So anyway, that is going to be the format for today. And so let's get on with it. So let's run the U.S. legal disclaimer first, and I'll be back in about 40 seconds. So hang tight, please. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Okay, well, let's get down to it. Hey, Frank B is here. Hey, nice to see you, Frank. Thanks for coming by. Scott Montgomery, yeah, buddy, sounds good. Okay, good to hear. And Andy is here also. Andy says, hi, everyone. Good to see you, Andy. All right, wow, interesting day. So, okay, let's get to it. All right, so first on deck is Etsy. I did buy Etsy yesterday, July 18th. And the reason that I bought it, I initially bought it here. This the 1050 EMA cross is a good long-term approach to trend trading Etsy. I traded a little bit differently. I use the 1050 cross as my entry, but this is not a mechanical trade. This is a discretionary trade. But generally those crosses are good initial entry points. So I did enter here. I didn't like the price action the very next day, so I got out. But yesterday provided a V2 entry. Here we go up, we come down, we've moved sideways a bit. Yesterday did wash out the previous bar. Not a lot. This is not an ideal V1, V2 situation, but day 2 did wash out day 1. Day 3 closed above day 1. That is a V2 entry, but the reason that I took it was because in my experience, whenever you have a crossover, when you have a valid crossover like a 1050 crossover, a lot of times it will cross and it will come back down. But if you get a signal after it's moved against the crossover, I generally find that's a good place to buy. And so I did buy it yesterday. Boy, where was my entry? And now I think I accidentally got rid of my entry. But anyway, it was right at the close because I buy everything at the close. But you can see today it has moved up. We did hit one profit target. I took about 12% of my position off. As you know, I like to phase out of the market whenever it gives me goes in my direction a certain way, which is actually 0.45 of an ATR. Whenever it goes 0.45 ATR from the previous day's close, I will go ahead and take a partial profit. I don't want to take the whole profit, but my personality is I like to take profits. And what it does is it helps me stay in trades longer. If I never took any profit, it would be very difficult for me to just let that run and run and run. So for me, it works to take profits because the bigger picture is that it helps me to hold on to larger gains. And as you know, in trading, you really do need to have large wins to pay for all the little losses you're going to have. So it's very important to let things run. But this is just a way for me that helps me hold on to winners longer. And it also works out nice too, because a lot of times you'll move up, you'll hit 1 or 2 profit targets, it will come back down, but at least you locked in some profit targets when the market gives it to you, pays for a lot of commissions, and they really add up. I mean, I hit hundreds and hundreds and hundreds of profit targets every year, and a lot of them on trades that eventually go against me. So it really does add up. So I did hit one profit target today here, almost at the high at 16.19. I'll take you over to this other chart. So going forward, how am I going to manage this trade? So, all right, so listen, we did hit the 1 ATR channel so far and reject it. We've rejected the 100-day, which is not exactly bullish, right? But does this mean that I'm going to just exit the trade because of that? And the answer is no. Now, on the other side of the coin, would I take a trade here today? Absolutely, I would not. There's a difference between taking a trade lower, running into some resistance, and staying in that if you're in the profit, because whenever I have a profit, I risk a little bit more. When I have an open profit, I risk staying in even if we have some kind of negative price action. If it was huge price action, yeah, I may go ahead and just lock in the profit. But would I take this trade today? No, I would not. It's a completely different story, because if I took it today, I don't have any profit, and we did just reject the 1 and the 100. So I hope that makes sense. So if I enter something and I'm in the profit and it has, you know, like a minimal negative rejection, that's fine. I will stay in it. I'll give it some room to breathe. But if I'm not in the position, I would not enter the position based upon this here. Different down here than up here. So, you know, the real question is, where would I, you know, what is going to be my stop? Well, we haven't moved more than 1 ATR, which is kind of a minimum for me. When the stock moves from my entry a minimum of, you know, about an ATR, then I will stop, then I will start to trail. But right now this has only moved about half ATR, 5/8 of an ATR. So I'm going to have to give it a little bit more room. If it continues to move up, yes, then I will start tightening up my trailing stop. But, you know, when we look at this bar, where would be a good place to say, okay, we are wrong on this trade? Right now, the 5 would be too close. You could use the 10. I'm probably going to use the 20. It lines up a little bit higher than halfway this bar. You know, if you have a large bar up, there is going to be some inherent support at the 50% of this range. And the 50% right now is right about here. So, you know, if losing the 20 would probably be my initial trailing stop on this trade right now. Now, if when I bought it yesterday, my initial trailing stop would have been here, the halfway, the washout bar, probably the 50. So in a way, we did move our trailing stop up, right? So, but if I would have entered here and it had gone down, I would have used the halfway of the washout bar. That's the proper way. It's the halfway of this washout bar. Now that it's moved up, I am moving the trailing stop to basically halfway of this bar, which is about the 20, give or take. So anyway, it is up today, which is good. The markets are all red now, so I like the relative strength of Etsy. You know, whenever you have a stock that is strong enough to be positive when the rest of the market is negative, that's called relative strength. So it has some good relative strength. So this has been a good profitable trade so far on this last exit from last entrance here yesterday. So we'll see where this moves, but at the very least, glad we got some profit targets. I got one profit target today. All right, IWM. So IWM, this is not a discretionary trade. This is a completely mechanical trend trade. I took it back on June 28th when the 10 crossed over the 50. This is a good, profitable, long-term back-tested approach on trading IWM. We did enter at 155.88. It immediately gapped up, and we took about 25% of the trade off, which of course I'm very, very glad we did, because we actually locked in some profits up here on that 25%. But ever since then, it's just been moving sideways, sideways, sideways. Have hit a couple profit targets since then above where we bought them, so that's good. We did hit one profit target yesterday, but you can see we are currently down on this trade. Our entry is 155.88. We're at 154.38, but again, this is a more of a long-term trend following approach. My stop will be when the 10 crosses underneath the 50. Now, when I took this only a half position, which has worked out. And the reason why I only took a half position, because it was outside of the value zone. I like to buy things in the value zone. You know, we just looked at Etsy. The entry was in the value zone. And, you know, I feel like you get the easiest movement from the middle of the value zone up to about the third ATR, the middle of the value zone down to the negative third ATR. Once you start getting up to that third ATR, the rubber band pulls pretty tight. So this is going to be a longer term trade. It was up today. You can see I almost hit one profit target, very, very close, 155.51, and the high was 155.43. So I missed it by 8 cents, but that's how it goes. I think we have about 55% of this trade left. So glad that we locked in some up here when the market gave it to us, but going forward, I will stay in this trade until the 10 crosses back below the 50 to the downside, or if it starts moving up, of course, I will continue to phase out and phase out and phase out until I'm out of shares. So that is the plan on IWM. Hey, Steve Burns is here. Thank you so much for coming. It's an honor. Steve says the stock market is becoming dull and needs a pullback and reset. Yep, I couldn't agree more. You know, when the market goes up and up and up and up, after a while, I mean, you run out of buyers at a certain point, right? And you need the market to pull back to get new buyers interested and to get the market moving again. Hey, Steve, thank you so much for that nice mention on Twitter today. I really appreciate that. As always, it's always an honor to be included in that group. Steve says, I'm exiting AGQ today for a 4-day gain of 12%. Big volatility expansion and bearish reversal after a hell of a run. Yeah, I figured you would be. I saw the futures last night and I was like, oh, Steve's gonna be really happy for that. But you know, it did gap up and reversed. It's a big bar, big reversal bar. So you know, good time to get out of that. And congratulations on that great win. And we'll go through silver in a second. Scott Montgomery says, your Etsy entry yesterday was 65.24. Was it? Let's see. I have two Etsy charts here. Yep, right there, 65.24. Over on this chart, I had to guess, so 65.18, 65.24. On these trend following trades, I have two different charts, so yeah, this was my main chart. You're 100% right, 65.24. Okay, thanks, Scott. Dr. Jorgensen says, Etsy finally behaved today. V1, V2 with crossover helped. Yep, that's right. You know, when you have that initial crossover, if it immediately goes against you after that crossover happens, just in my experience, I've seen that it's decently a good time to buy when that happens. But you have to have a trigger, right? Just because it goes under after the crossover happens doesn't mean anything. You know, it's kind of set up in the zone, but you need an actual reason to get in. I mean, with any trade, you need a reason to get in. You can't just anticipate. You need a reason. All right. Steve Burns says, I'm in Etsy with the 1050 moving average crossover. It has been trouble. It has been having trouble trending. Lots of chop. Yeah, that's right. So we're in the same trade. Yeah, we're in the same trade. Hey, Murat, how you doing today? Look at Murat today with this CFL. Big day up, big volume. It was on earnings. I'm glad it went your way. Congratulations, Murat. Nice going, buddy. All right. All right. What did we just do? We just did IWM. So, all right. So let's get on to SPY now. All right. So, as you know, I do buy the SPY every day at the end of the day, and I sell it first thing the next morning. So this doesn't seem very scientific or very technical. So Let me explain to you why I do this, but first I'll show you the chart. So we did buy SPY yesterday at 298.83, and it opened today at 300. Oh, well, I sold it today at 300.01. So that was, obviously a nice overnight trade, profitable trade, and it makes it even better because look at this, we got the high of the day. So let me show you real quick why I do that. I know you guys have seen this, and I apologize. Oh, did all my charts disappear? Son of a gun. All right. All right, here we go. So this is from Lizanne Saunders at Bespoke Invest. But if since 1993, if you would have bought the SPY on the open in the morning, sold it on the close in the afternoon every day, since 1993, you would have actually returned a negative 13.9%. But if you've done the opposite like we do, and we buy the SPY each day at the close, sell it each day the next morning at the open, you would have actually returned 634.2%, meaning that more than all performance, all the gains in the S&P since 1993 have come in after hours. I mean, wrap your head around that. They have been bid up in the after hours, and they've been bid up in the pre-market, and they've been sold into the opening. So you can see, here's the blue line. Back from 1993, this is buying in the afternoon, selling in the morning, 531.9% return. The opposite of buying in the morning, selling in the afternoon, negative 13.9%. So there's a huge difference. There's a huge edge in holding the SPY overnight. There are ups, there are downs, there's drawdowns, multi-year drawdowns, months drawdowns. So you can't go into this just thinking, hey, why isn't this working? You have to take the long-term view on this, and you have to position size correctly. Conservatively, I use a 10% position size each night. So, the long term shows you that this is definitely, there's an edge to this approach, but like any approach, it may not work in the short term. So position size small, position size properly, so that you can do this for the long term and let it work out for you. All right, so again, we bought at 298.83, gapped open, we got at 300.01 cents. So big reversal today. This to me, this is quite bearish for the market. But again, I will again buy this again down here at the close today, and we'll sell it first thing Monday morning. Okay, VIX. So I did buy VIX back here on July 17th, and the reason that I bought it is, we were in this downtrend, we were under the 30 RSI. This day here, not only did we go from under the 30 RSI back over the 30 RSI, we went from under the third ATR channel back over the third ATR channel. And the third ATR channel and the 30 RSI are levels that I look at. If a stock is weak enough to break under the 30, that's not a good sign, because the way I view this is there are groups of buyers that come in at the 30. But if those groups of buyers get overwhelmed and they cannot keep the price up over 30, then that's systemically very weak for the stock. But if things change and we can go from under 30 back over 30, and we can go under the third ATR channel back over the third ATR channel, I look at that as bullish. And now I look at that. Now I look at the 30 RSI and I look at the third ATR channel underneath me as support. And when I say support, I mean that there's going to be more buyers down there. All right, so that's support. So we did gap down. We have gone positive on the day. That does not surprise me now, because the market's starting to sell off. So anyway, I will keep this position as long as we stay at this point, as long as we stay over the 30 RSI. If it continues to move up, and start hitting my profit targets, then I will probably move my trailing stop up. Maybe a close below the 5-day, or the previous low would be my trailing stop. So anyway, has moved, it was down quite substantially today, and now it has reversed. So no profit targets yet on this trade. No, that's not correct. I did hit one profit target yesterday. Yeah, did hit one profit target yesterday near the very, very top. So anyway, so that's the plan with the VIX. Keep it, phase out. My initial target here is the 50 RSI. So if we just moved up, then rejected the 50, then I would lock in profits there. But if it does continue to move up, extends, then I will start trailing it with maybe the 5 or a close below the previous day's low. All right, Verizon. I did buy Verizon back here on the 12th of July, and the reason I bought it, we had this fake out bar, meaning you have a high, next day goes higher, reverses under. That is a bearish move. However, if you have a bearish move that is immediately followed by a bullish move, that changes the equation back to bullish. And so the reason we paint this little green triangle here is because we have a high, we went higher than that high, we then closed below that high, but the very next day, it has to happen, the very next day goes back above that high. We did hit a profit target the very next day. It was kind of moving sideways. My initial trailing stop on this was the 20-day moving average. This is the blue line. Yesterday it went under, but it was strong enough to close back over. Today gapped up, did not hit one of my profit targets, but certainly today at the end of the day, I am going to be getting out of Verizon because looks like it's going to close under the 20-day moving average and also under the 50 RSI. So this is a loss, but again, it's nice that we did take some profit, at least one profit target up here, took a few chips on the table, at the very least pays for many commissions just by hitting that one profit target. I mean, you're gonna have losing trades a lot. Probably 40-50% of your trades are gonna be losers, but this is gonna be a small loss, right? Nothing too bad, and so that's acceptable. All right, XLV. Boy, I had a lot of hope for this trade. It was such a good setup. We moved up higher, we moved down, we stayed in the value zone, we moved sideways. We had this beautiful V1 yesterday where we washed out the previous day's low, closed back above the previous day's close. This is a V1. My stop on this was basically close to a halfway of this bar. I was really keying off of the 2 days ago close here because that was the trigger. This had to close above here. Now we've just immediately moved back down. So 92.19 is my line in the sand on this trade. So if it does close beneath 92.19 today, I will go out and just take this loss and just lock it in. It's unfortunate. This was such a good setup. I was hoping for more on this, but sometimes the best setups don't work, right? So the worst thing that you could do is think, this is a great setup, I'm just going to give it a little bit more room. But no, please don't do that. Make your plan, stick to your plan. All right, so if this closes under 92.19 today, I will go ahead and just get out. All right. All right. So before we get on to taking a look at new positions, I did want to go over this, do a little trader psychology. This is from Stephen Goldstein at AlphaMind101 on Twitter. He has a really good Twitter channel, talks a lot about psychology of trading. He's a trading psychology trading coach, so he posts really great stuff. And he kind of reshared this post here from Ray Dalio, who is kind of a living legend as far as trader, money manager. So, when Ray Dalio says something, we should probably listen. But he says here, when I refer to your ego barrier, I'm referring to your subliminal defense mechanisms that make it hard for you to accept your mistakes and weaknesses. So, your ego has this defense mechanism that defends your ego against making mistakes and your weaknesses. We all have it, and trading is something that will really, really bring that out. You'll just say, no, screw it, I think I'm right here. But really what you're saying is, if something's going against you and you're saying you're right, but the market's doing the opposite, you're saying you're smarter than the market, and it's really not possible. But Stephen then says, ego hijacked has no respect of age, experience, rank, or station, right? It's like cocaine. Cocaine does not discriminate against what color you are, what gender you are. It will get you addicted. And ego, same way, has no respect for age, experience, rank, or station. It impacts the retail trader working from his bedroom through to the world's largest hedge fund managers. Hell, it took down Lehman Brothers. So this is something that we always have to battle with. This is always the devil on our shoulder. And, 88% of retail traders lose money, and they lose money because they hold on to losing positions, but their ego tells them, no, it's going to go back up. So, that's why you lose money in this market. You hold on, you stay in a position on the wrong side of a moving average, and you tell the market that it's wrong and you're right. And, if you want to lose money like everyone else, the 88%, go ahead and do that. But, if you want to make money and take the money from the other 88%, you have to do the opposite. So it's just always a way, that I talk about with, you are battling your emotions. The war's going on between your ears. It's not going on the trading screen. So long way to say, when you have a plan and it goes against you, just get the hell out of there. Don't worry about your ego. It's more important to make money than to be right. And you hear traders, market wizards, everyone says that. It's more important to make money than it is to be right. So if you have a really strong ego, leave it at the door, and let's focus on making money, not being right. So watch out for that ego barrier. And if you do this a lot, you'll understand when it starts creeping in. You'll feel, you're like, okay, that's my ego. Just let it go. I deal with this all the time, but I've just kind of trained myself that it's just black and white. If I hit my stop, I'm just out of there. I don't care how much I believe in the company or how much whatever. So anyway, I wanted to share that with you. If you haven't subscribed to Stephen Goldstein's Twitter channel at AlphaMind101, please do. It's really, really good stuff. All right. All right, here we go. Well, let's get to it. And then, listen, if any of you have questions at the end of the day, please let me know. Just type them in the chat, and I will do my best to answer them. Hey, Mount Doji's here. Good to see you. Good to see you, buddy. Dr. Jorgensen, we need some buzz gum to get us going. If only we knew where to get some. Johnny is here. Hey, Coke is going on special before earnings. I know. That's that entry, that short entry on Coke that I didn't quite get. Dang it. But that's how it goes. All right. Going to be some interesting things here today. Apple. Well. Big up day and big down. But on the positive, everybody, we are back. We are starting to get back into the value zone. That might set us up for a decent long position in this later. But so we'll just have to watch this, but certainly nothing today. One thing I do want to point out, you see from here to here is 1 ATR. From here to here is 1 ATR. That's the average true range. That's the average range of Apple over the last 20 days. You can see today this bar is larger than 1 ATR. So what does that mean? That means that in order to move more than 1 ATR, you need an extra amount of selling pressure or buying pressure to make that happen. Well, today we are larger than 1 ATR. You can see this bar here is longer than here. So this is saying there's a lot of selling coming in here today. So we don't want to get involved with that. We want to wait till the bars start to narrow less than 1 ATR and then get a trigger. So nothing on Apple today. Okay, so this is what Steve was talking about. Steve and I took this trade back here when the, well, here I can show you this way. When the 5 EMA crossed over the 20 EMA, this is another good long-term back-tested approach. It does not work every time, but what you will have is you'll have a lot of small losers, and then you'll have some really big winners, and those big winners hopefully will pay for your losers and more. So we both took this trade when the 5 crossed over the 20. As you know, if you've been watching this live stream, this was a great trade for us. We phased out. I ran out of shares yesterday right there at the top. All right. Now Steve, on the other hand, kept the entire position. Right? So he is looking for some kind of exit. And today, this is a very bearish reversal kind of blow off top move. So he is going to be exiting here today. But we certainly do not want to look at buying this today because this is a bearish, really bearish candle. So, anyway, nothing on silver today, but that was a wonderful, really wonderful trade we had from here, phased out all the way to there. Second largest trade I've had of the year. Advanced micro devices, you know, there's certainly nothing there today, but I do like the action, the move up. We are starting to come back into value. This is where I'm going to start looking for a trade. Now, just because it gets down to here does not mean I want to buy automatically. What I'm looking for is first criteria, I'm looking at to get into the zone. This is the zone. The second thing I need is a setup. And what I mean by a setup on a V1, V2 is I need to see these bars start moving sideways, showing me that there's no more supply coming in the market. So first you have the zone, second you have the setup, and third, you have the trigger. That's the actual price action that triggers you into the trade in the direction that you want to go. So we're 1/3 of the way there, but nothing on advanced micro devices. Amazon, well, you know, again, we poked our head up here above the 3rd ATR channel. You're pulling the rubber band pretty tight when you get up to these levels. A few days ago, we came back into the channel. And since then, we have moved down. We are now moving down into the value zone. But again, phase 1, value zone. Phase 2, setup. Phase 3, a trigger. So nothing on Amazon today. Boeing. So, you know, Boeing's had a huge day today. It's a 61 RSI. There's no way I can take this trade. My theoretical profit target's going to be the 3rd ATR channel because that's really where the rubber band gets pulled tight. So there is no risk to reward for me on this trade. I did get in this trade a half a position when we closed back above the 200-day moving average. Next day, it went right against me. Had to just go ahead and take my my loss. Next day, it closed back above the 200. You could have technically bought it there with the close back under the 200, but I did not. Went up. I didn't want to buy here. If I would have held it, if I would have entered here, I would have held it here, but I would not enter a new position here because we're at the 1st ATR channel. Then yesterday, it went right back down. I was like, oh, sweet. I'm so glad I didn't take that trade because if I had taken the trade, I'd have had to get out here. And then today right back up. So it's up, down, up, down, up. So anyway, nothing on Boeing today. This is very bullish, this big move here, but the risk to reward ratio doesn't make sense. We have earnings coming out. So if any of you have Boeing, really, I'm really happy for you. I hope that keeps moving up. Alibaba, nothing really here right now. You know, I needed to come back into the value zone to even get me interested. So there's nothing here. Caterpillar, This is a V2, right? You can see the V2. Here's day 1, day 2, day 3, day 2. Washes out day 1, day 3 looks like it's going to close above day 1. But this is not valid for a few reasons. One, we have had no sideways movement. We just went up and down. I don't like that. I'd like to see it go up, down, sideways. This one here, we're in the zone and we have a trigger, but we don't have a setup, right? So this one doesn't qualify. So nothing there. DDM, this is the double leveraged Dow Jones Industrial ETF. Again, we went up above the third ATR channel, pulling the rubber band pretty tight. We've moved down, we gapped up, we've reversed. So definitely nothing on the Dow today. I want a better risk to reward ratio like we had back here when we took this trade on the 6th of June. Close back above the 200 day. If I'm wrong small with a close under the 200. If I'm right, stay open-minded. And I did. This was a mechanical trade, right? So there was no interfering with the prices. It's just either it's going to close under the 200 or it's just going to move up until I run out of shares. And that's exactly what happened. I ran out of shares right about here, but that was a great trade. But again, the initial risk to reward makes sense. It does not make sense here. All right, Walt Disney. Okay. Phase, we're in the zone, right? That's our first criteria. Second criteria, is it moving sideways? Yeah, I guess today, it's down today. It's not great. The bars are still larger than 1 ATR, so that kind of nixes it. So really the only thing it has going for it is kind of phase 1. We're in the zone. We need this to move sideways for the setup. Then we need a V1, V2 trigger to trigger us into the trade. But who knows, if this starts moving sideways, it might start getting interesting, but nothing today. Etsy, we talked about. I bought that with the 1050 SMA cross. This is a discretionary trade. Was able to hit one profit target today. I'm going to be using looks like at this point, the 20 EMA as my stop to the downside. So Monday, if it closes under the 20, I'll go ahead and just get out. If it continues to move up, I'll just continue to move up in phase until I'm out of shares. Facebook, same thing, held this third ATR channel, went back in, everything seems to be down today. We're kind of creeping into the value zone, but that's phase 1, right? The zone. Phase 2, look for the setup. Phase 3, look for the trigger, but nothing on Facebook today. 5 below did bounce off the 200. It's in the value zone. We have a high above us here. So this is range bound, nothing on 5 below. Gold had that big move up yesterday, but just as with silver today, it has moved back down. So nothing on gold. I like to see this get into the value zone, and again, look for a V1, V2. And by the way, I talk a lot about V1, V2, so I do have a link in the description of this video where I do an entire hour lesson on specifically what V1s and V2s are. So, if you get some time, please go ahead and watch that video. The link's down below in the description. I think that will be helpful. But nothing on gold today. The risk to reward doesn't make sense. It did make sense when we took a live trade back here on May 30th. Back here, we had the 520 cross just like we did on silver, right? In the value zone. This is a sweet spot. This is right where I want to buy. And this was a great trade. We phased out all the way to here. Google. Coming back into the value zone, big bar here. I don't like this. We did take a trade on Google back here on a 1030 cross discretionary trade. It was a one-day trade. Had a nice little profit there. Did get out. Next day, it closed back above the 200, so I re-entered, got stopped out. Then I never got back in after that. But so any of you have Google, I hope that continues to move up. Today, we've had a larger than 1 ATR bar downwards. So, maybe down here at the 200 might be interesting, but it does have earnings also. Goldman Sachs, too high, nothing there. Here's a good example of a close under the 200, back over the 200, took out the fractal. This was a beautiful 2-day trade. Exited, I think, here, but that was a nice like 3.21% trade. Got out because it lost the 70, but nothing there right now. IBB is weak, nothing there. Intel is actually up today, but nothing there, just too high. Russell, we talked about, we have the Russell. So this is a mechanical trade, 1050 mechanical trade. So nothing new on that. Johnson & Johnson is down today. I did sell a put down on Johnson & Johnson down to 122. So by August 2nd, if the price does not get down to 122, I'll keep all the premium. Just quickly, the reason I wrote the 22 was that here the 122 price lines up with the first ATR channel on the monthly. On the weekly, it lines up with the third ATR channel on the weekly, and on the daily, it lines up with the previous low back in December. So that is how I like to sell puts. I like to see my strike price have technical support levels in all 3 time zones. Coca-Cola, dang it. Big down day. Just real quick, this is a good example of a triple top with bearish divergence. Here we make a high. We have strong momentum vis-a-vis the MACD bars. We make a higher high, lower momentum, higher high, no momentum. So the setup was there, but I needed the trigger. And if this bar here, this was a V2, day 1, day 2, day 3, day 2 washes out day 1. If this would have closed under here, I would have taken the short position, but it didn't. And I guess the analysis was pretty good, but I just didn't get the trigger, unfortunately. Lockheed Martin, nothing on Lockheed Martin. If we got down to the 50 in the third ATR channel, may be interesting. We took a nice V1 over here in the channel, and we had a beautiful trade up to there, but nothing here right now. Although it is, getting interesting. MasterCard, just too high, nothing there. Merck, we had that big move down. We had the rally back up. I was looking for this to move back down when it got to halfway, and today it kind of finally started. Nothing there. Microsoft, look at this, everybody. This was up like $4.2, $4.20 because of the earnings. But look, it immediately got sold into. This is a reason not to buy in the morning, right? If you waited till the end of the day and you really want Microsoft, you get a whole lot better deal on it than if you just did it in the morning, right? Netflix. Well, Netflix is continuing down. Looks pretty nasty. Good reason not to hold through earnings. I might get interested on Netflix if we got down here to the $300 mark. It's a good round number. Lines up close to the 100-week moving average, but nothing on Netflix. Nike, I do kind of like the direction Nike's taking. We moved up. We're moving into the value zone. Not too big of bars. So this one might be interesting going forward, but nothing there today. Philip Morris had that big gap up on earnings. Nothing there, too high. PayPal, again, looking for this to come back into value. I want to buy it into value for move back up, just like here. Moved up, moved down. V2, day 1, day 2, day 3. Day 3 closes above day 1, and we had a beautiful trade right up to about there. The Qs gapped up, reversed, nothing there. It is getting into the value zone, but we need a setup. Here's a real life trade that we had. We went under the 200, back over the 200, giving me a very good risk to reward ratio. If I was wrong, I'd be really wrong small, or I just let it run till I ran out of shares, and that happened right, I think, here. So we phased out from here up to here, having a potential for a big win, which we did, compared to a really small loss. Snapchat. Well, it went into the value zone, but it could not hold in the value zone. So Nothing on Snapchat. You know, possibly down here, the 50 and the third ATR channel might be interesting, but we do have earnings coming up, so nothing there. SPY, of course, we bought that yesterday at the close, sold it right at the top this morning. Now it's reversing. Okay, so nothing on SPY. SSO coming back into the value zone. It is a V1. It's a V1, and it also triggered this downward triangle where you have a V1 to the upside. That should be positive, but if it's immediately followed the other way, that's negative. So we have two negative things going on here. So that doesn't look so hot tamale. You know, just to show you another live trade, our last trade on SSO was here. We went under the 30, back over the 30, under the third ATR channel, back over the 30 ATR channel. We entered right here. We phased out all the way to there. Nice big move. If we were wrong, we would have been wrong small. Bonds under the value zone, back in the value zone, so nothing there. Tesla, very strong, up above the third ATR channel, but not a good risk to reward. Twitter, nothing on Twitter today. Natural gas, nothing on natural gas today. Oil, you know, moved up strongly, went right through the value zone. Now we're under value, but nothing on oil. The dollar, nothing there today. The VIX, moving up. When we do have this with the close under the 30 and the close under the third ATR channel, with the close over and back over the third ATR channel. So this one is up slightly for us today. Verizon, again, we have this. We bought this here. We phased out one profit target here. Then it's just kind of puked on us. So I will be exiting Verizon today for a loss. Energy. Well, we did have a V2 here today. I gotta say that it was not a great V2 because we came down so strongly. We did reject the 50 RSI yesterday. I'm sorry, the 50 moving average yesterday and closed back up. And then on top of that, we are triggering a V2 today as well, and back in the channel. This is one of those tough calls. It's a 49.48 RSI. You know, I am gonna just write this down for a potential half position. For the end of the day, potentially. I'll just have to watch it. So this is one of those examples where I don't like the movement down, but it's kind of offset by that we did reject the 50-day moving average, and then today we triggered a V2 and also rejected the 50 and the 1 ATR channel. Now it's at 50.11. So, you know, if I were to buy this, I would buy half position here today. My stop would be a close below halfway of the washout bar or a close below the 50 moving average. So this is a potential today. XLF. So yeah, nothing on XLF today. Real estate. Looks like we're losing the 50 moving average is not so great. Utilities just moving sideways, really nothing there. Healthcare, that was the one that I had hopes for yesterday, but it looks like we're going to have to be exiting this today for a loss. And then pharmaceuticals. So my one and only potential today that I see is the XLE. This is the energy industry ETF. We did create a V2, day one, day two. Here's day one, day two, day three. Day two does wash out day one. Day two closes above day one's close. I don't like the move down like this, but I balance that with the fact that we rejected the 50 and we rejected the -1 ATR channel. So this does look good here right now. The ultimate decision will be if it's closing over a 50 RSI, but even with that, it would only be a half position. So let's go ahead, take a look at our current positions first. Are we okay with Etsy? Yes, we are okay with Etsy. IWM, the 10 is still above the 50. I'm sorry. The 10 is still above the 50, so this is a trend trade. I'm going to need to continue to hold this. The SPY, they'll be buying this at the end of the day. VIX is moving up stronger now. Verizon, I will be exiting that. My line in the sand there was 57.08. So, you know, it is going to be a loss, but it's a small loss, right? You're going to have losses. Remember that. Just keep them small. This is small. And XLV, as long as it closes under 92.19, I will be getting out of XLV today as well. So let me put my orders in here. We have 5 minutes. All right. All right, so XLV is taken care of. I did put the order in for Verizon to sell. That definitely looked like that's going to go away. VIX is getting stronger. And Energy Select is... Let's take a look at the weekly on Energy Select. Nothing great, that's for sure. I think the play here with the XLE is, you know, if we do have tensions with Iran, that will have an effect on oil and therefore on the energy sector. So, okay. I am going to go ahead. I'm going to put an order in for 1/2 position on XLE to buy right at the close. But this is a half position because it's more of a B plus rated trade, not an A rated trade. All right. All right, so we have our orders in to sell healthcare, to buy half position of energy, to buy our SPY, and to sell our Verizon. And that is that. Etsy's fine, IWM's fine, SPY we're buying, VIX we're holding, XLV we're selling. All right. Murat says, would you buy Netflix if it forms a V1, V2 on Monday? No, I would not, Murat, because we're under the 30 RSI. I really don't buy anything regardless of the setup as long as it's under 30 RSI, because there's a lot of buyers that come in at the 30 RSI level, and if they're not strong enough to keep it above 30, then it really means it's weak. So for me to get interested on Netflix, I really would have to have the minimum of it closing above 30 RSI. But I don't think I think the move on Netflix is not trying to buy a move up here right now because we had such a strong down move. I think the move down here would be to buy lower at some other support level, because I feel like any up moves at this point are going to get sold into. I hope that helps, Murat. Mount Doji says, definitely eyeing Nike. Yeah, I like Nike too. I mean, not yet, not right this very second. But, it's one of those ones that we want to watch. It's moved up, it's moving down nicely and orderly. The bars are starting to narrow. So right here we are in the zone and the setup is starting to form. The best thing that could happen, Mount Doji, is Monday we'd go down, reverse, back up, and create a V1 right here. That'd be great. Johnny says, I think Microsoft always has a big sell-off when it hits a new high. Yeah, I've noticed that too. That was my trigger for selling last week. It was on my list. Oh, I'm glad you didn't have to go through that today. Energy just like risk reward, not so good with 200 above. Let's see.
Order filled. Order cancelled.
Yeah, but it's still 2-to-1, Bruce. Because if I'm wrong, I'm wrong here. I'm wrong from here to here. If I'm right from here to here. So it is about a 2-to-1 ratio, which is allowed. Steve says Iran is claiming they captured British oil tankers. Yeah, that's what I read. Might be good if Iranians continue irritating Trumpster. Yeah, well, that's kind of the reason of the trade. But, you know, we have from here to here as a potential upward move. We have from here to here as a potential downward move. So it is more than 1-to-1. Maybe not exactly 2-to-1, but more than 1-to-1. All right. So let's make sure. So yes, so we kept Etsy. We did buy the SPY at 297.17. Boy, I'm glad we got out the beginning for a good trade on that. 297.17. All right, so that's our new entry for our overnight SPY right there. Yeah, VIX moved up nicely. Did we hit a profit target? Oh, really close. No, we didn't. And then we bought XLE and we sold XLV and sold Verizon. So, all right. Well, interesting day. Boy, what a huge reversal, guys. You know, Dow's down 67. I can't remember. Were we up a couple hundred points, 180 points earlier? So, yeah, big reversal today. So, listen. Questions and answer period. So if you have any questions, please let me know if I can help you in any way. It doesn't have to be, you know, something I talked about today. If you have any other questions about stock trading, investing in general, please let me know. But before we get to the answer section, let me just put in a quick plug for myself, let you know that I do offer private one-on-one teaching and coaching and mentoring lessons in the evening time via Skype. I've had really good success with my clients. I've really turned them around. Some of them were, the losses were unbelievable, the amounts. And, you know, after sitting down with them for a few sessions, I really was able to turn them around. So, you know, during this live stream, I'm the one speaking, I'm the one showing, but in a private one-on-one lesson, the difference is that, you know, after I teach you, I make you teach it back to me. Then I really, really know that you have it. So it does make a difference. I'm sure it will improve your trading. So if it's of interest, please reach out to me. My hourly rates and my email are in the description of this video. Also, you can reach out to me on Twitter. But just so you know, if you do have an interest, it just starts with the free phone call just to get to know each other a little bit better. I want to know about you. I want to know about your trading. I want to know about your trading challenges, you know, the amount of time you have available, what your goals are, and then I'll put together a lesson plan that hopefully addresses all of those and gets you on your way to becoming, you know, an improved trader, and also using an approach that fits the personality from the information that you gave me. So if you've been thinking about it, you know, reach out to me and let's get that phone call and, you know, let's start taking steps, right? So, and then also, listen, if you like this channel, I really would appreciate if you have not subscribed, if you would subscribe. And then also, there's a little button down there. There's a little thumbs up button. You know, please do me a favor if you found today's podcast helpful, if it's helping you, please just hit the little free button down there. It's free and it does help Google promote the channel more and get this information out to more traders. There's tons of traders out there, everybody, that have a very, very difficult battle with trading. And, if they watch this channel every day, I know it would help them. So help me, help them, and, hit the thumbs up button. And talk to your friends about it. If you have trading friends, invite them to the channel, maybe share it on social media. So, all right, enough of that, but I did want to put that little plug in. And so let's see, I do have a few charts from Frederick that I did want to go over. Let's see. And I'm not sure, was Frederick on today? Maybe he's not on today. Yeah. Okay. Well, he can watch them. He can watch them later. Before I get to them, let's see. SPY, hopefully we make money while enjoying the weekend. Yes, we shall see. I think a lot of it will come down to this Iranian situation, Bruce. But, the plan with the SPY is to buy it every day. If you buy it some days and not other days, it's going to affect probably the integrity long term of the approach. So I know it's tough to buy every day, but that's the plan. Can you let me know if MU hit the 80 RSI today or where the resistance was at? Sure. Yeah, I don't think it did. Looks like it got to about 75, Mount Doji. Let's see. It is positive, however, that even though we are off the high, we did break out of this previous high back here at 45.30. We went up above it. It would have been more bearish if we would have gone up above it and then closed back into the old range or closed under that high, but we were able to stay above it, Mount Doji. So that, that is positive. The way I look at this is, the third ATR channel, to me, there's a lot of resistance there, but sometimes you can break through it. And if you do break through it, kind of the ultimate extreme level, I learned this from studying one-on-one with Dr. Alexander Elder, is the 6th ATR channel. Now, it doesn't mean that it can't go beyond the 6th ATR channel. Sometimes it does, but most of the time it does not. So, that's why I have 6 ATR channels on this screen. Like, most of the resistance comes here at the 3 and the 3, but eventually you'll get those really rare extreme moves that go up to the 6th ATR channel. So, if I were trying to pick a spot, like the ultimate high spot on Micron, just using that approach, probably about 48, 48.20. If you look at AGQ, you can see the extreme. We did go outside of the 6 ATR channel and then closed substantially below it. So, it did tag the 6th ATR channel. So we don't talk about that much because stocks don't get to the 6th ATR channel very much, but I hope that helps, Mount Doji. Dr. Jorgensen says, good hype. Hope it is not too hot. No dog attacks on the pup today. Yeah, this dog come at my little puppy that I'm taking care of. Luckily, nothing happened, but man, that wasn't cool. Thanks, Bruce. I will have a good hike, and hope you have a good time golfing. Mount Doji says, I appreciate your help with this. You're certainly welcome, Mount Doji. All right, just real quickly, Frederick sent some charts. And these are some of the trades that he took. I believe he took this trade here. It's not too bad. Here you have the upward sloping 200-day moving average. We went below the 200, closed back above the 200, and we also closed above the previous day's close, giving us a V1. So I do like that trade, right? We rejected the 200. We rejected the previous day's low, closed back above. The market tested these levels both below here and below the 200 and was strong enough to move back up, telling us, that these prices were not acceptable to sellers at this point. There were no more sellers that wanted to sell here. So then it's moved up here. So that looks like a good starting trade. That is his first one. Second one, bought V2 RSI over 50. Yeah. MACD's positive, yes. Price did not close above the fractal, reject the first ATR. So yeah, I mean, this is a decent setup. It moves up here. It does move back into value. I would have rather seen a couple days down or move sidewards. We're not getting a lot of sidewards motion. We're just getting an up, down. But it's not bad. The only thing that I don't like about it is that it's bought right here, just barely under the 1 ATR channel. I like to get the triggers more in the middle, but it's still acceptable. But you are going to have some resistance here at this previous high, Frederick. But on the bright side, if we can bust up through there, there'll be some breakout buyers that will buy there as well, and it will create a fractal as well. But remember, the best entries come within the 1 and the -1 ATR channel. All right, and then he had one more. Okay, this is similar to the other one that he had. We came down, we moved up, we came back down, rejected the 200, did close back above the previous day, so that does give us a higher low V1 entry. I do like that. I don't like the bar here. I don't like this kangaroo tail to the downside, but all in all, not bad at all. Frederick's selections are getting much better from when he started. So congratulations on that, Fred. You're definitely making progress. The charts you're sending me are looking better and better, but this one does concern me because of this big bar here. But again, you know, your risk to reward's pretty good. If you're wrong, you're wrong from here to somewhere under the 200, but you do have some good upward potential move. So I hope that helps, Frederick. Mount Doji says, hope you all have a good weekend. I definitely need some R&R. Take care. Yeah, boy. I'm glad it's the weekend too. This was there's a lot of work trading on this particular week, but it was a positive week. It was a profitable week for us. So that is always good. Johnny says, have a great weekend. Hey, you too, Johnny. I appreciate it. I appreciate everybody coming today. I appreciate Johnny and Mount Doji and Dr. Jorgensen and Steve Burns. Always really appreciate you coming, Steve. Hope you and Holly and the dogs have a good weekend. Murat, thank you. I hope you have a good weekend over there in Norway. Did we miss anybody? And Scott Montgomery. Always good to see you, my friend. Thank you for coming. And Andy and Frank. Yeah. Hey, listen, if you have time this weekend and you haven't watched my lessons on YouTube, or you're not super clear on them, you know, do yourself a favor. They're in the description of this video down below. There's 4 different lessons. I think they're the 4 most important lessons that I can give you related to what I do here during the live stream. So, you know, if you have some extra time kicking around, you know, go and watch them. If you have any questions when you watch them, feel free to send me an email over the weekend and I'll be happy to try to clarify. And Steve, congratulations on that great silver trade. I assumed you got out. All right. Last chance for questions. Oh, by the way, here is this is Steve's website, you guys. You know, I'm not paid to promote this or anything. I just want to do it because it's like the best website ever. If you get a chance, go to newtraderu.com. He has really good trading courses. He has a video newsletter. He has wonderful articles, and you can also follow him at @sjosephburns. But you'll be a better trader, I promise you, if you read these. If you read his post, if you read these posts on his website, if you watch some of his courses, you watch his newsletter. I do all the above because I always want to continue to be a better trader, and you can do that with Steve's stuff. All right. Well, listen, I guess that is it. Please go out, have a nice weekend. Please go out and do something nice for somebody. Say hello, hold the door open, give them a wave, pet a dog, be nice to people, be polite to people. We need more of that in our society these days, and it's also good for you too. So We will be back, God willing, on Monday during the last hour of the market. And so if you can join us, I would really appreciate that. So, all right, everybody, have a nice weekend. Thanks you for your support. Really means a lot to me. And we'll see you Monday during the last hour of the market. Take care, everybody. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.